Yeah, I think, markets trade off of certainty, right? And when there's a lot of uncertainty, like we've had the last couple of weeks, markets have been in turmoil. I was joking. I think the art of the deal is President Trump took a big rock, threw it in the middle of a pond, and just caused, a ripple effect. And you're kind of waiting for those ripples to settle down. And I think that's what you saw with the rhetoric from yesterday to today. Instead of ratcheting up tariffs even higher, 145%, that wasn't high enough. We're going to go higher. It sounds like now they're willing to negotiate. They put the olive branch down, and going to look to possibly bring back some of those tariffs, and bring some negotiating to the table here. So I think that's what the market liked. That's why I saw the big rally the last 2 days. And of course, there's a lot of other countries right now that the Trump administration is furiously negotiating with, trying to come some sort of deal. Because if you're a manufacturer right now in the U.S. and you don't know what your import costs are, you're basically coming to a standstill. In America, we don't like that. We like business moving all the time. So at this point, we really got to see these deals come quickly. And I think that's what the market's telling you is the right moves are happening.
All right. So I slugged this episode, avoid money mistakes. And here's my concern with the markets, at least it would seem the last 2 days on the swing up. Is now the time to start deploying maybe some of the cash you would have had on the side? And I ask that question because I think deliveries to the ports in California, Long Beach, are still well below, and I'm talking about from China. They're down something like 30%, and we don't hear yet how the Chinese have responded to the overture from the United States.
No, we're still waiting on a response, and I guess from President Trump's perspective, he says he wants to hear from Xi Jinping directly. So I don't know how that's going to play out. But I think the bottom line is China can't afford not to trade just as much as we can't afford not to trade. And arguably, they can't afford more than we can't afford, given the fact they've come out of this huge property bubble that burst over the last couple of years. They've been trying to export their way out of it. And, I don't know what the real number is, but, not just direct goods that are coming from China. There's a lot of indirect goods coming from China, whether it's through Vietnam or Canada, Mexico, a lot of other places. And, I think at this point, the conclusion is something has to be done about that. And I think as an investor right now, I always say uncertainty is your friend. When you know it's going to happen, you know what the next move is, and you have clarity. Well, markets don't tend to settle down. They tend to settle up at them.
Oh, I might use that as a quote when we write this up. But let me ask you this, because are the people watching us on X and on YouTube, on LinkedIn, you can put your questions for Ryan and then our guest, Justice, when we bring him into the discussion. They will answer your questions. All you have to do is put your chat or your question into the chat section on X or on YouTube, and we'll make sure that it gets asked. So you just talked about the uncertainty, and I want to bring up the volatility. Part of the back and forth has been whether or not President Trump would fire Jerome Powell at the Federal Reserve. Now, the president in previous tweets has called him a loser, has said needs to be terminated as soon as possible, and is pushing as hard as the president can for Powell and company at the Fed to cut rates. But I interviewed the CEO over at InfraCap, Jay Hatfield, and he thinks Powell should be fired, even though the president has backed off on that. Here's what Hatfield said to me, and after the soundbite, I want you to respond.
I'm hopeful that Scott Bessent, who did win over the Navarro camp, is now in charge. And he's a capital markets person, so he knows exactly what we just talked about. You'd have a huge loss of confidence and a big drop in the market, which we've already had plenty of that. So I'm confident / hopeful that it'll be no earlier than the third quarter, and there'll be some sort of process developed by Bessent to replace the Fed chair, but not do it immediately.
So he still thinks Powell's going to be gone in the third quarter. What do you say?
No, I'm not buying it. I mean, I think you need the independency of the Fed. Is it an apolitical position? Completely, arguably not. But we did learn when you don't call the Federal Reserve chairman a big loser, the bond market settles down, right? I mean, you had it spiking yesterday. It's come down a little bit today. It's moderated. And look, if you're in Jerome Powell's situation right now, you kind of are between a rock and a hard place, because short term, yes, inflation has come down, right? That CPI number came down to like 2.4% last month. Oil prices have plummeted. You're at a 4-year low in oil prices. And to me, oil really fuels all inflation, right? Oil prices in that 10-year treasury kind of trade in lockstep. But no, tariffs are a wild card. And look, if we don't believe that tariffs cause inflation, I've got a wall in China I'd like to sell you. Let's face it, right? If we put a 10-15% surcharge on, let's say, clothing, well, we could go to an American brand. Oh, wait a second. There aren't any American brands. We don't make clothes here in the U.S. You're gonna wait for us to start manufacturing those clothing here, or you're gonna pay the tariff. So I think tariffs inherently are inflationary. We don't know what they're gonna look like yet. So if I'm the Fed chair here, I'm probably gonna wait and see. I'm not gonna rush to cut rates to see if it does have an impact on inflation. Because the worst thing you want to do here is cut too early.
Mm-hmm.
It exacerbates inflation. That 10-year treasury gets out of hand. It really starts to go up like it did in the fall when the Fed cut back in like September. So I think, there's a real risk here. If you do cut too early, and you push that 10-year treasury up further, that increases our borrowing costs. And we know we have a huge deficit right now. I think that's a real sensitive issue that has to be handled with kid gloves here.